have Shanghai trading with just a minor positive uptick right now, just around 9 points in the green.
For FY24, IMF has forecast India's growth rate at 5.9%.
Well, TCS, according to the consensus expectation, is likely to report a 1.9% dollar revenue growth on a quarter-on-quarter basis.
One could sense some loss of momentum, right? So this needs to be watched.
Buffer Securities is turning bearish, and they've cut the earning estimate between 2 to 13%.
30 points higher on the Nifty. The sensex is up about 80 odd points.
This sideways or consolidation is not just in India, it's global.
The penetration of CNG vehicles in our portfolio should increase.
Own brand sales has seen a sales growth of 15% in Q4.
The Nifty today is above the 17,750 mark.
March data is indicative of a possible recovery.
With changes in technology, battery chemistry, I'm sure it's a matter of time that EVs will succeed.
Achieved a turnover of about 55 crores for GCMMF.
The March CPI is, according to our poll, expected to come in at 5.63%.
We have Nifty, which is sitting at the day's high, 80 points higher on that one right now.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me, Mangalam Malu and Surabhi Upadhyay. Good afternoon. The bulls have decided to camp on the Lal Strait, and they're not leaving just yet. 17,800 conquered on the Nifty. 8th consecutive day of gains. It's up 0.5% on the benchmark indices. Mid-caps don't want to be left behind. Mid-caps moving in step with the frontliners. The advanced decline ratio firmly in favor of the gaining side. So this has turned out to be another smart session for our markets. The big movers today, pharmaceuticals, autos and IT. IT is seeing buying ahead of numbers starting from TCS today, post-market hours, and Infosys tomorrow. But it's going to be an action-packed evening as well. So quickly, let me lay out what is lined up after the market shut for trade at 3:30. So at 5:30 p.m., we're going to get the India March CPI and the February IIP data. The March CPI expectation for March India is that it's expected to moderate on a quarter-on-quarter basis, 5.6% versus 6.4% month-on-month. IIP is less important, backdated growth number, but the February IIP estimate is of a more than about a 5.2% growth. US CPI inflation will also be out, and that's also expected to show a moderation. 6.4% in January was down to 6% in the month of February, and currently economists are expecting a number of 5.1 to 5.6% for the month of March. And to add to that, you've got an earnings calendar. So TCS press conference is at 5:30 p.m. Numbers come out a little before that. 4:30, 5 p.m. is when we should expect. And the big three numbers that we are watching: dollar revenue growth, 1.9%, constant currency revenue growth, 1%, and EBIT margins of 25%. And the FOMC minutes from the March meeting, the Fed meeting in the month of March, when we had a 25 basis points rate hike, will be out at 11:30 p.m. India time. And that will also give an indication of the conversation between the Fed officials about the banking crisis and the impact. So not just on inflation, etc., but we will get clarity on the direct and indirect impact of the banking pain. So as I said, the gainers are pharma, auto and IT. On the losing side, you've got Nestle a bit subdued, HUL. State Bank of India is putting the entire Nifty PSU banking index under pressure, and SBI has lost close to about 1%.
All right. You said bulls have camped on the Lal Street. It's been 7 straight sessions and 8th session running. I was just mapping that journey of the bulls, post the 17,300 mark. I was just looking at it. April has been a month for the bulls, and how. On April 3rd, we conquered 17,400. The next trading session was April 5th, 17,500. April 6th was 17,600. Yesterday, 17,700. And today is 17,800. So that's how we've done. At some point, of course, after this rally that we've seen over the last 7-8 days, we run the risk of running into resistances, and the 100-day moving average really stands out there for both the Nifty as well as the Nifty Bank, just a couple of 100 points away from where we are right now. But in this mountaineering climb, if you have some Sherpas, they're basically the option writers. So every day we've seen option writers take the market higher by the ones who were caught on the wrong side. The 17,700 call writers who believed that the market wouldn't cross past that 17,800 mark, caught on the wrong side. So all of them have unwound their positions. Some 44 lakh shares have been unwound, and as a result of which the market's only moved further higher. And the put writers are the Sherpas at the bottom. We're protecting the support of the market. So 17,800 put writers extremely active right now. 1.3 crore shares added. 50 rupees a premium. That's telling you that 17,750 is an important support to watch out for, and 17,750 put writers too equally active. So support moved higher from 17,500, 17,600 to now 17,700 to 17,750. The only index to watch out for in the last hour of trade is the mid-cap index, because it's Wednesday, and as it's happened over the last 3-4 Wednesdays, the NSE has introduced a new futures product, which is mid-cap weekly options expiry, and that takes place on Wednesday. The mid-cap index has been outperforming all through this week, so let's see whether that sustains in the last hour or not.
Well, because of everything that you folks said, especially the options levels that you mentioned, Mangalam, for me, this is going to be a very interesting 1 hour, because we've been watching the zone of 17,750 to 17,800 with the Hawkeye past 2-3 days. This is where the congestion is. This is where the resistances come in. And it's not done yet. I mean, there's still a fight going on. We're just 10 points now shy of that 17,800 mark. So let's see if it gets taken out really decisively, then that's a complete out-and-out victory for the Bulls. But I think the Bears want to try and still sort of be in the game. So we don't know. It's a very interesting 55 minutes ahead. But what is definitely working in favor is the fact that this is not a unilateral move led by just the Bank Nifty or one big move on a Reliance. It's pretty wide. As Reema mentioned, there's IT that's come back. There's, of course, a lot of pharma, and we'll talk about that as we go forward. Let's pull up the Nifty contribution list if you can. Quite a few names. In fact, barring large cap consumer, almost every other part of the market is doing really well. Large cap consumer and SBI, those are the only two areas where there's negativity. Otherwise, you have a lot of different pillars and legs to this rally. So far, so good. Advance decline ratio has been holding up pretty well. You still have over 1,800 stocks advancing and just about 1,080 or so declining stocks. So the breadth is good. It's pretty wide and diverse. And the Nifty is definitely taking aim at that 17,800 mark. So we'll wait and watch, but definitely advantage Bulls, at least for the time being.
Absolutely. And here's what's lined up in the next 1 hour on Closing Bell today. A whole host of stocks in focus. Pharma stocks gain as Q4 is expected to see an improvement in margins owing to a decline in input and freight costs, even as key drugs keep exports healthy. Divi's and Biocon lead the pack higher.
AMC is trade higher despite downgrades coming in. We'll talk about some of the trends at play. The stock's up between 1.5% to about 4%.
Auto stocks, Eicher Motors, Hero Motor Corp are in focus on the back of fresh brokerage calls. Key highlights from the reports coming up.
We'll discuss the